Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We've got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger.
Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin. And in today's episode, we've got a huge update coming out in just a couple of hours. That will be Jerome Powell's Federal Reserve's Federal Open Market Committee releasing the effective federal funds rate. That's all the technical jargon. What does that mean? In short, Jay Powell, one of the most powerful bankers, financial planners in the entire world, and his organization, the Federal Reserve, will be hiking interest rates from 4.9 to 5.15% at 2 p.m., exactly 3 hours and 58 minutes from when I am shooting this live stream. That is going to be a huge upheaval to the United States economy, because this will be the third consecutive 0.25%, 25 basis point rate hike that we have seen thus far, and it will be the 10th consecutive rate hike that we have seen in the last 2 years. 10 consecutive rate hikes. That's the first time that we've seen that many rate hikes that quickly, that aggressively since the 1980s, when we saw interest rates hike all the way up to nearly 20%, leading to over 10% unemployment here in these United States. This is a huge event, not only in cryptocurrency, but also, of course, in the broader economic space, because when you raise interest rates, that is essentially the Federal Reserve or any other central bank's tool to curtail inflation. That is the primary tool that the United States Federal Reserve has in its arsenal to get inflation under control. As you guys know, inflation has been coming down. It hit over 9% annualized last year. I believe it was in June. Now it's pulled all the way back down to 5%, but that inflation is still at a sticking point. It seems with this rate hike and with the subsequent CPI release that will be coming out 1 week from today, that is next Wednesday, May the 10th at 8:30 a.m., we will finally see something critical taking place. That is, the effective federal funds rate will be higher than inflation, so long as inflation stays still or moves to the downside 1 week from today when CPI is released. And I do believe that that is what will happen. It seems that a week from now, in fact, 4 hours from now, we are going to be seeing that the effective federal funds rate is higher than inflation. Why is that important? Well, oftentimes what the Fed does is that they will raise the interest rates, and that will, as they begin the raising of the interest rates, start bringing down the inflation, and they'll raise interest rates while inflation is coming down until they meet together, and then they both come back down towards target 2%. That's what the Fed has been trying to do, is get inflation back down to target 2% after printing trillions of dollars in response to the pandemic. We increased the balance sheet from about $4 trillion to $9 trillion. If you'd like to see a video on that, we made a video titled "The Fed's Plan to Burn $9 Trillion. That went up about 2 months ago. You can find that on the YouTube channel. They have been bringing down the balance sheet by rolling off of treasuries and mortgage-backed securities, but now they're also continuing to hike those interest rates in an attempt to get inflation under control without doing too much damage to the United States economy. We're going to be talking about the effective federal funds rate hike that is imminent today on Coffee and Crypto, but also in a video that's coming out in about 55 minutes, you're going to be getting an in-depth analysis of not only why I think that they will be hiking the interest rate 25 basis points, but you're also going to be getting an in-depth analysis of what will happen in response to that hike of the effective federal funds rate over on Bitcoin and how it's impacted the SPY, Bitcoin in past, and how that will likely set us up for a rally moving into the next week. That video has just been set to premiere. So you guys feel free to join me and watch the premiere of that video over on the Crypto Jebb YouTube channel here in just about an hour when that does go live right after this stream. This stream will be wrapping up at 10:45 a.m. That video will be going live at 11 a.m. Eastern. I'd love to see you there. Let's go ahead and read some chat, though. If you guys are looking forward to today's stream and today's announcement, make sure to go ahead and let me know in chat. Drop a 1 in chat if you'd be interested in seeing me live stream when that announcement actually does come out at 2 p.m. Eastern. And then, of course, Jerome Powell will be doing a speech at 2:30. I'm not totally sure that I'll be able to live stream that, but if I am able, I would be more than happy to. All right, let's read some chat. By the way, shout out to everybody who's in Club DeFi. We've had a lot of people joining Club DeFi lately. Thank you guys so very much for being a part of what we are building over there, trying to teach people about financial sovereignty and about technical analysis. If you guys want to learn how to be financially sovereign using the cryptocurrency markets as your vehicle towards that financial sovereignty, I highly encourage you to sign up for Club DeFi's Principles of Technical Analysis with the link in the description box down below. You can go to bitcoinacademy.teachable.com, or you can just type Club DeFi into Google and you will find Club DeFi's Principles of Technical Analysis over here that has not only 62 videos teaching you everything that you need to know about technical analysis, it's also going to give you access to our premium Discord server and our office hours, where you get to join a call on Discord with me every single Monday at 8:30 a.m., where I'm going to be able to teach you guys whatever it is that you want to know, because you guys are able to come to me with your questions and I'm able to answer them in a one-on-one format. Make sure to join Club DeFi if you haven't already. All right, let's read some chat. Sean O'Brien was first today. Shout out to you, my friend. He said, hey. Grand Roofing Incorporated said, good morning, everyone. Crypto Nebs in chat. RC Moore said, yo. Smiley face. Good to see you. We've got Crypto Jebb in chat who said good morning. Shout out to Crypto Jebb. We've got Alex Nybo, Mike Lowry, who is a moderator and a Jebbi Grand Council member. Thank you so much for being a member of the channel and helping to keep things under control. Grand Roofing Incorporated said, hoping everyone is doing well. Hashtag FinSov. Gotta beat those bots. That is right. There are a lot of bots out there in crypto, aren't there? John DeFilippo. Did I get that right? DeFilippo. John DeFilippo said, happy Wednesday, Jebb. Good morning to you as well. Ray Rodriguez said, good morning from Austin. Robert Casanova said, good morning, everyone. Crypto Trucker Mike said, good morning, Jebb. Eric Ward said, hey, it's CJ's TA. What's up? Hey, it's CJ's TA. I think that's what you were trying to go for. Tell me if I was wrong. Rocket Metal News said, hi, Jebb. Robert Casanova, excuse me, said, hot them like folks. Thumbs up. Hit the like button, guys. Really appreciate all of you guys tuning in. Jebb sitting to the left of the screen is not a good look. Trust me. Here we go. I'm sorry. There we go. Robert, I fixed it. I am now sitting, there you go, middle of the screen. Is that better? Tell me, is that better? Perfect. There we go. Good deal. Sorry about that. Good morning, Jebb. Looking for some information on Link. We might be able to do some content on Link in the future. Thank you guys so much. I am feeling a little bit better from my cold, by the way. I was getting a little bit messed up from that cold the other day, but I think I'm starting to get on the other side of it. I'm still a little sniffly, so forgive me if that becomes an issue today. Let's go ahead and jump on over to CoinMarketCap, and then we're going to talk about Bitcoin and this ensuing Fed decision that's coming out at 2 p.m. today. Over on Bitcoin, over on CoinMarketCap, you can see that Bitcoin is currently trading at $28,372, $70. It is up 1.53% over the last 24 hours, and that is quite an interesting movement, because what it shows is that Bitcoin is actually managing to go through a bounce, despite the fact that we're likely to see a 25 basis point rate hike at the next FOMC meeting here in about 3 hours. If you have not already, make sure to go to the YouTube channel and check out the fact that this video, I'll pull it up really quickly. Make sure to go to the YouTube channel and check out this video. It's ranked at the top for Crypto Jebb. In 3 hours, Jerome Powell will break Bitcoin Fed rate hike. Make sure to go and tune into the premiere of this. As I said, this video will be going out relatively soon. This is going to be a big event, and I definitely want you guys to make the most of it. Anyway, over here on CoinMarketCap, we can also see that Ethereum is currently set up with a 1.54% rally. A lot of cryptocurrencies are rallying, moving into that Fed rate decision this week. Keep in mind, guys, even if Bitcoin is down a little bit right now, it is up 70.54% year to date. Ethereum is up 54.54% over the last 5 months and 3 days ever since the beginning of this year. Binance is up 32%. Cardano up 53%. Dogecoin up 10%. Polygon up 29%. Solana up 115%. There is quite a lot of growth going on in the cryptocurrency space right now, predominantly because Bitcoin hit its basically bear market low right at the beginning of the year. So the cool thing about this year, 2023, is that all of our year-to-date rallies basically are telling us how far Bitcoin has rallied thus far this year, and how far Ethereum has rallied thus far this year, how far Cardano, XRP, Dogecoin, Chainlink, whatever it is, has rallied thus far this year. That's quite the interesting data there. Now, let's go ahead and look over here at this chart. This is Fred. Not Fred with the backwards R if you grew up watching Nickelodeon in the 2000s. This is the Federal Reserve Economic Data website from the St. Louis Fed. This shows us the federal funds effective rate, otherwise known as the effective federal funds rate, the EFFR, going back nearly 70 years. This shows the funds rate going back to 1955, and you can see here that during the 1950s, 60s, 70s, and on into the very, very, very first couple of weeks of the 1980s, the effective federal funds rate was continuing to hike and hike and hike and hike. And part of the reason for that was because of something called the Bretton Woods Agreement. The Bretton Woods Agreement took place right around 1944, and that started moving us down this path of taking the US dollar off of the gold standard. We had begun taking ourselves off of the gold standard going as far back as basically World War I. You could argue even earlier than that, but we really started to solidify our position as a nation that we were no longer going to be on the gold standard, moving into the second third of the 1900s. And by the time Nixon came around, we were completely off the gold standard entirely. That is where we started to see the effective federal funds rate start coming down. We moved into this economy where we were no longer based on where we were no longer basing the amount of dollars that we had in circulation based on the amount of gold that we had sitting in Fort Knox or at the central bank in New York. We were now basing it off of whatever policymakers wanted to say. And so since policymakers wanted to be able to make the economy grow faster, they didn't have to continue hiking interest rates for the sake of maintaining the stability of the economy, because they were dealing with a gold standard, even if they weren't actually using it as a gold standard, because they print money without actually increasing the amount of gold bullion in reserve. They still were nominally calling themselves a gold standard currency, that being the United States dollar. Moving into the 80s, we were no longer on a gold standard, so the effective federal funds rate continued to slip down and down and down and down and down. And gone were the days of my great uncle Johnny, who I've probably told you about once or twice here on the channel, where he made $1 million in farming and agriculture, sold everything, put it all into CDs. They were making him 20% a year, and he was sitting pretty, making 100, 200 grand a year just from that investment, because CDs were making 15, 16, 17, 18, 19%, and he retired on that. Lived out the next 40 years of his life until he died in the mid 2000s on that. That's what was possible back then. But at the same time, we also saw that home values were significantly lower. The reason is that if you bought a home, the vast majority of the money that you were putting into that property was going to the bank, because the bank had to charge you 22% interest to make any kind of profit. When we saw the effective federal funds rate start coming down, that corresponds with a huge, huge bull market in housing prices. Then something happened post-2008. Because in 2003, 2004, they dropped the interest rates down to 1%, and they liked it there. This was post-dot-com bubble. These gray areas represent the different recessions throughout the history of the United States economy. You've got the 2008 financial banking and financial crisis right here. You've got the 2001 dot-com bubble, basically kicked into high gear right after September 11th, of course. You saw the collapse of the Soviet Union. That sent quite a bit of that ended up being a very bullish thing for the global economy. Obviously, we're not talking about the human element of that. Of course, the collapse of the Soviet Union is probably one of the greatest things that ever happened to humanitarianism in the history of mankind. But in the short term, of course, it was a very disruptive event that caused a recession. Then, of course, you've got OPEC over here messing with gas prices back in the 1970s. You've got some of the constrictions having to do with the Vietnam War, having to do with the Korean War and different conflicts in the South Pacific. No, excuse me, not in the South Pacific, in East Asia. All these different recessions, generally speaking, led to drops in the interest rate. You can see that they only called it a recession for one quarter. here in 2020. That is bull hokey, what people call it that. That is nonsense. There's another word for it. Complete nonsense that we've got 1 quarter of recession here. We were in a recession for much longer than that, unless you're skewing your data like you're the Bureau of Labor Statistics and it's 2020 and the pandemic's running rampant. Nevertheless, you can see there's a trend here that the effective federal funds rate hikes in times of prosperity, theoretically, so that in times of constraint, the Fed can constrict that, excuse me, guys, can constrict that funds rate and allow for the economy to expand because they've made the cost of credit cheaper. In short here, what do I mean by cost of credit? To take out a loan, you have to pay interest, or else the person that's loaning you the money is a Christian and they're just doing it out of the goodness of their heart. You know, the Bible tells us that when we are loaning as one brother or sister to another brother or sister in Christ, not to charge interest. You might not have known that, but that's one of the things the Bible tells you to do. That being said, that's not really how the banking system works. Generally speaking, when you're doing business, you charge interest. You can get into the religious side of that all you want. That's not the point. I'm just saying that if you are doing banking, unless you're a Christian, loaning money brother to brother, then you charge interest. That's how people make money, loaning money. To charge that interest, you've got to base it off of something. And typically that interest rate that the market bases things off of is the effective federal funds rate, or through another intermediary is the effective federal funds rate. For example, credit cards follow very closely with the effective federal funds rate. You just add like 15% interest on top of that so that those revolving lines of credit are able to make money for the credit card companies. The mortgages typically follow the 10-year Treasury bond, and the 10-year Treasury bond is heavily influenced by the effective federal funds rate. The auto loans, personal loans, business loans, HELOCs, all of these different loans typically follow the effective federal funds rate in some way. So when the Fed is setting the effective federal funds rate, they are essentially setting the base rate, and that's why it's sometimes called the base rate for the entire United States economy, and therefore, honestly, for the rest of the global economy. You can see that they're preparing for something based on this chart. The effective federal funds rate was hiked here from 1954 all the way to 1957. A recession came and they dropped it. Hiked all the way from 1958 to 1960. A recession came and they dropped it. Hiked all the way until 1970. A recession came and they dropped it. Hiked all the way until 1973. Recession came, they dropped it. Hiked all the way until 1980. Recession came, they dropped it. Hiked all the way until 1991. It was dropped a little bit because the writing was on the wall. The Soviet Union was collapsing. Gorbachev had opened up mass media, so people were starting to realize what was going on the other side of the Iron Curtain, and they wanted some of that juicy, juicy capitalism. They wanted some of our Coca-Cola and blue jeans, and so they decided to tear down that wall, as Reagan said, and then that caused a recession here in the short term. And when the recession came, they dropped the interest rates. There was a recession in 2001. Interest rates were sitting at 6.5%. They dropped it in response. Hiked interest rates moving into 2008. A lot of people at the Fed knew that there was a crisis going on in the banking sector. After all, most of them are bankers, and they knew what the banks were doing. If you don't know what the banks were doing, they were quite simply trying to incentivize people to build as many houses as they possibly could, and then loan the money to people that could never afford those houses, with things like negative amortization, where they're putting all the money into principal, not paying interest, just so they could get the mortgage, so they could put it into a mortgage-backed security and sell that bond to somebody and make more money in the mortgage-backed securities than they were making from the interest payment from the mortgage, and the whole thing collapsed like a house of cards. The Fed knew that was coming. Don't tell me they didn't. It's nonsense. Of course they saw it coming. Everybody who knew what was going on saw it coming, and a lot of people made a lot of money shorting the market. That's where the movie The Big Short comes in. They hiked interest rates moving into 2007 up to 5.25%, dropped it to the floor, left it at 0% until 2016. They started hiking it again because they knew that if they left it at zero forever, they wouldn't have an economic tool to battle the next recession. Then when we were sitting at 2.33%, pandemic started. They had already started dropping it because there were already some warning signs in the economy. By November of 2019, we were already at 1.5%, already had used some of that drop as stimulus. Then, when the pandemic kicked off, a month later, moving on into December 2019, January 2020, they dropped it to the floor, left it there. Now they're trying to pick up the pieces from all the inflationary movements that they made in the 2020 and 2021 calendar year. Now they're raising interest rates, and now they're likely to raise those interest rates all the way up to 5.25%. I'm sorry, 5.15%. Right now it's sitting at exactly 4.9%. Legally, that's what the last statement from the Fed says, going back to March 22nd, which was the last meeting. They meet every 45 days or so. All right, so I'm going to check chat real quick and see if we have any questions regarding this, but then we're going to continue jumping into a little bit more content here. Okay, let's see. I must be hungry. I heard bread and wood agreement. That's kind of what it sounds like. It's the Bretton Woods agreement. All right. Let's see. It was a what? Yes, that was Bill Clinton's wonderful idea. Yeah, for sure. Oh, goodness. Bill Clinton's. It's as if all of this is planned, Shane Weimer said. That's right. Good morning, Jebb from California. Love the show as always. Brief Crypto said, yo, Jebb, like, smash. What's up, Brief Crypto? Everybody go and make sure to subscribe to Brief Crypto. You got some cool content over there. All right, guys. Moving right along here. Now we're going to jump onto the Bitcoin and price action chart. Grand Roofing Incorporated said, nice silver play button. Gold is right around the corner. Yeah, this is actually, I really love this thing. It's so cool because whenever I show people this thing, people are like, whoa, I've never seen one of those in real life. See? Right there. Boom. Got it a couple of years ago. Need to dust it off, but I think it makes a good set piece. Got that and a watch that my wife got me for Christmas that I still need to go and get resized. It's a Vincero. Need to go get this size. It's a metal band, so I need to take it to a jeweler. But and then while I'm here, I guess I can show you. I got awarded. Rocking my shelf around. I got awarded the Influencer Award, best technical analyst in the cryptocurrency space in was this 2020 or was this 2019? I think it was 2020. I got it 2 years in a row. But anyway, they sent me this belt. I don't know if you can see that. Here, let me show you. Let's see if I can get the light on it right. You can see the light up there in the reflection. I love this thing. Figured those are a couple cool things. I was going for a silver theme on set, and all of those just happened to work right. I kind of threw myself off. Those things are not positioned correctly anymore. I'll have to fix that after the stream, but that's okay. All right. Good deal. Yo, somebody share your Club DeFi Lux algo with me. I won't tell. It's too expensive, lols. Oh, come on, Silas E. Borg. That's not ethical. All right, let's go ahead and jump straight on over to Bitcoin. Now, I'm not going to tell you anything about this chart right now because I'm actually going to be discussing this chart in this video. Oops, not that one. In this video right here that is premiering here in just about half an hour. So make sure to stay tuned where I talk about this chart, the history of the effective federal funds rate, how it's impacted Bitcoin, how it's going to impact Bitcoin next. But today, I want to go ahead and take a look at Bitcoin. It looks like TradingView might be giving me a little bit of problems here. Give me 1 second. Let me make sure that we're not lagging too much. All right, good deal. Let's take a look at the short-term technicals on Bitcoin. Now, the cool thing I've done here with the with that video that's about to go up, and also the thing that I've done here with the stream here, is I'm going to talk about the short-term technicals today, and I'm going to talk about the longer-term, broader historical analysis and that broader, longer-term trend that we're going to in this afternoon's video, in this morning's video. Actually, it'll go out at 11. So let's go ahead and take a look at the short-term technicals, and then I'll make sure not to do any repetition, and everything that I'm talking about in that video that's coming out at 11, I won't talk about here because I talked about it there. So make sure to stay tuned for that. Right now, Bitcoin is sitting in a massive, massive correction. Excuse me, not a massive correction. Maybe I shouldn't be too hyperbolic unintentionally. Bitcoin is sitting in a correction. Let's see, which chart do I want here? I got my pick of the litter. I've got so many of them. Bitcoin is sitting in a small correction here below $28,545. It has gone through a correction of about $700 just this morning. We were sitting up at $28,789. I'm on the wrong screen. Sorry, there we go. Let's reframe that properly. We were sitting up at $28,789. Bitcoin did go through a correction this morning, starting at around 3 o'clock this morning. We went through that drop. That's not a bad thing, though. That's actually a very good thing. And it is telling about the way that the cryptocurrency market may start to look at this. Right now, Bitcoin is riding above this uptrending level of support right now, and it also has a flat level of support at $27,750. That level of $27,750 is pretty critical, and so is this uptrend, because with this news coming out that we will likely see come out, as you can see here, in 3 hours and 35 minutes, Bitcoin very well may, and it probably will, frankly, go through a drop below the uptrending level of support, below $27,750, and down to $26,686. Now, there is a possibility that that doesn't happen, and there's a very good reason why Bitcoin might not drop. If you hike the effective federal funds rate, then that leads to some good in the economy, meaning that inflation comes down, but it also leads to some bad. It typically means that businesses have a harder time expanding because the capital costs are higher. It's harder for them to take on debt. It's harder for them to take on debt so they can expand their business, increase employment. And then you see layoffs as well because the companies cannot afford the kind of payroll that they had before. Google, Tesla, MasterCard, Visa, Apple, Amazon, Walmart, all of these companies have laid off tens of thousands of employees, largely due to these hiking interest rates, largely due to the changing environment around inflation, largely due also to the demographical concerns that are going on in our nation with so many people aging out of the workforce into retirement. They're taking all of their skill sets with them. So not only are we facing an economic crisis, we're also facing a demographic crisis. Not as bad as what you're seeing in Europe, but it is still going on nonetheless. Those things lead to the possibility that, hey, maybe Bitcoin will have a rally here with the effective federal funds rate going up, because maybe people will see the effective federal funds rate going up as one, maybe it's the last effective federal funds rate hike. The Fed has in past said that they are going to hike it to 5 to 5.25%. They're going to move it to 5.15%. That's dead smack dab in the middle of the range that they said they are probably going to hike it to and then reconsider. That could cause some of the people at the Fed to start reconsidering whether or not they actually want to hike it any farther because of the constraining that it's already putting on the economy. You can see they've already dropped it down to 25 basis points, so they might be done for right now. This could be the last effective federal funds rate hike that we see. And if that effective federal funds rate hike comes in, like I said, there is a possibility that people might see it as a bullish thing. Why? Because it could be that that's already priced in. We don't know that until the event takes place, but it is very possible that it's already priced in. It is very possible that when that news comes out, it won't cause a drop in the market because people already knew that it was coming. And so that's where this vertical line comes in. This vertical line is on the wrong day. This vertical line right here represents 2 p.m. today. It represents when that effective federal funds rate news comes out. One of the questions I want to ask you is, do you think, and I'm actually going to put this in a poll, so give me 1 second. Do you think that the Fed rate hike is already priced in? Yes or no? Side note, somebody asked me what's going on in the EU. Not as bad as in the EU. What's happening in the EU? The Eurozone, the Euro, the Pound, and the few other currencies over in the Euro do not have the same hegemony that the United States dollar does. So they don't have the same they don't have the same monetary resilience that the United States dollar does, because the dollar is the base of everything. Put it like this. If you have a foundation and then you have a house built on top of that foundation, the house is not only susceptible to termites, it's also susceptible to foundation damage, whereas the foundation is not susceptible to the termites. The United States dollar is the foundation of the global economy. Everything else is built on top of it. So if you're built on top of the foundation, if something happens to the foundation, that messes you up. But there's also a lot of other things that can happen to the foundation. That's oftentimes why you don't have to replace your foundation, but you have to replace your roof every 20 years, because the roof is contingent on the foundation. It's contingent on the weather. It's contingent on trees that are around it. It is the most exposed of the entire house. And so it is the part that needs to be replaced. When was the last time you replaced a wall in your house? When was the last time you had to replace a window in your house unless somebody threw a baseball through it? When was the last time you had to replace your foundation unless you live in Florida and your house is built over a sinkhole? You don't have to do that. You have to replace the roof because it's built on top of everything else. The euro is built on top of the United States dollar, which is that foundation that's built on the bedrock of human sentiment and the usage of currency as part of society. That's the bedrock under the foundation. So part of the problem with the euro, not a problem, but part of the reality of the euro and every other currency is that they're built on top of the United States dollar. So when something impacts the United States dollar, not only does it move the euro and all those other currencies as much as the United States dollar moved, they also are susceptible to their own geopolitical realities and their own demographic realities. Some of those are that there's the largest war going on European soil that we've seen in 70 years. And if Ukraine falls, World War III might begin. Not this whole, oh my goodness, a nuke could come flying out of nowhere and we'll start World War III for no reason. There's no war right now, but, like we were talking about in the 2010s. No, if Russia succeeds in capturing Ukraine, not only will that be their largest territorial acquisition since 1939 when the Soviet Union invaded Poland, they will also have acquired all of that NATO military hardware and be very interested in using it against NATO, which is aggressively expanding into Norway and probably very soon into Sweden. So that is a geopolitical reality that the euro has to face, on top of the fact that they are undergoing huge raw resource supply crunches because many of the raw resources that the Eurozone imported came from Ukraine and Russia, especially in the petrochemical and in the industry sector. They're having to resource all of those resources, which is causing a huge amount of inflation. On top of that, the Eurozone is aging into retirement at one of the fastest rates of any continent on the entire planet. And because of that, they are undergoing a very similar effect of what Japan had to go through in the 1980s and 1990s, where they had to get used to the fact that their workforce is tiny and their retired population is huge and their birth rate is very low because they all live in cities. Nobody lives out on a farm and needs 12 kids to run the farm or the ranch, so they have a population crisis. The euro is in bad shape. The Eurozone is in bad shape right now. Not as bad shape as like Japan is, but the Eurozone is going to undergo quite a lot of changes over the next couple of years. Kale XN said, I wouldn't put money on Russia winning in Ukraine. Not going to lie. Yeah, I agree. I don't think Russia will win, but there is always that possibility that something could happen because the Russians, even if they're vastly technologically outgunned, they are vastly outnumbering the Ukrainians, in some cases 5 or 10 to 1. I don't know about you, but I don't think I'd win a fight against 10 toddlers if they started running at me, even if I was, 5'10" and 155 pounds and went to the gym and all that. I'd probably still lose because I'm outnumbered, even though they're like tiny. And, so that's I say that as a joke because my son loves to try and climb on me. He's 2. Anyway, moving along here. What's Bitcoin going to do over the next couple of hours? Well, Bitcoin knows, and everyone in crypto knows, that this decision is coming. That means that this whole market is kind of in limbo. What I've seen happen plenty of times with the Fed meetings is that when the effective federal funds rate news does come out, we see a pretty big drop in the market. But even if we don't see a drop, we at least see volatility. Going back to the last effective federal funds rate hike, which happened March 22nd, 2023, we saw a drop on Bitcoin that started, because remember, the news came out at the top of the hour, for 28,568 all the way down to 26,652, a $2,000 drop in 2 hours. It is possible that Bitcoin does that again. Now, the thing I want to point out to you, however, is that the last time we saw an effective federal funds rate hike, before that, February 1st at 1400 hours, we actually saw a huge rally. Why? We saw a $1,500 rally. Because before that hike, December 14th at 1400 hours, we saw a massive drop. Why? We saw a massive drop because this was a 0.5% 50 basis point hike. We saw Bitcoin drop from 18.3 all the way down to 16.3, a $2,000 drop in 5 days. Saw a major drop as a result of that. So if that trend bears true, then we need to kind of look at why these last movements have happened. We were seeing a major uptrend when the effective federal funds rate hiked here on March 22nd. That halted that uptrend. Here in February, it did lead to a very short-term rally, but then that ended up falling over and moving to the downside. In fact, 6 hours after we had the effective federal funds rate hike come out, we hit our top, started dropping. Here on the 14th of December 2022, when the effective federal funds rate hiked 50 basis points, we saw the market ended its uptrend that very minute. There's a little bit of a difference here this time, though, and that is that Bitcoin is actually in a downtrend this time. Every other time that the effective federal funds rate has hiked, the market's been in an uptrend. Right now, it's actually in a downtrend. So the question is, and we don't really have a lot of context to give the answer for this right now. We kind of just have to wait and see. Will the effective federal funds rate, because we're already in a downtrend, drop the market more substantially and send us down to like 26,686 like we did during the last effective federal funds rate hike back on the 22nd of March? Or because we're already in a downtrend, will the market think, we've already corrected enough, this isn't that big of a deal, we've already priced it in because we already saw it coming, and so the market doesn't move at all. In fact, it might even rally as we saw in February. Both options are possible, but what I can tell you is this. We're likely to see a $1,500 to $2,000 movement based on historical precedent, no matter the direction, at 2 p.m. today. We're likely to see a lot of volatility. Here's how you trade that. There are a couple of trends that are very important right now. There's this downtrend and there's this uptrend. I'll just color them in a different color so you can see them a little bit more clearly on my messy chart. These two white trends right here represent the constriction that the market is undergoing right now. You can see very clearly after I drew those that shows that we are in a symmetrical triangle pattern. For any of you guys that are in principles of technical analysis, you will know that there's a video over here where we talk about patterns such as these. We talk about them over here in wedges. It's a type of wedge. We also talk about them in our other videos having to do with continuation and reversal. Very important pattern. And what we're seeing here with this pattern is that Bitcoin is constricting upon itself. Even if you were to bring out the Bollinger Bands and have it on the correct time frame, which would probably have to be the daily chart. Yes, the daily chart, maybe even the 6-hour chart. You can see, let's see what the 8-hour chart, 12-hour. Yeah, I think the 8-hour chart encapsulates what I'm trying to say the best. On the 8-hour chart, you can see the Bollinger Bands are constricting, showing that there is a decreasing volatility in play right now. That decreasing volatility is very important because it shows also that we're sitting here in this symmetrical triangle pattern. We're going to break out of it in one way or the other. That's what I'm getting at. When that effective federal funds rate news comes out, whether it catapults the market to the upside because people are excited that maybe this is the last rate hike, or people get freaked out because now the rates are even higher and oh no, could it keep going? It's kind of hard to tell what the mass psychology of that will be because we simply don't understand how people are thinking on that. You guys seem to think it's priced in, but maybe the rest of the market doesn't. This is a small subset of the entire trading community. The point is, when that effective federal funds rate decision comes out, I give it over an 80% likelihood that we're going to see a break of one of these trend lines, regardless of which one. So it's funny, on the premiere of the video that's going out relatively soon, somebody even said, and it's gone now, but for some reason, I don't know where it went, but there was a top chat here where someone said that they are prepared in leverage trades, in multiple leverage trades. I would encourage you, not necessarily leverage trades, but to be in a position to trade, if you're a trader, in both directions. Oftentimes, we can't tell for certain which direction the market is going to move when a decision point comes, but that's okay. We don't need to know the exact direction the market's going to trade because we can prepare for both scenarios. We don't know whether it's going to move up or down, but we can prepare for both. If Bitcoin moves above this downtrending level of resistance, that's where you could set a long position. You could very easily set a long with an open price at 28,840. You'll be able to tell if Bitcoin's in a major rally because I'm saying it's going to break straight through the ceiling if it goes up. So watch it in real time, watch it manually, and remember this for if I manage to live stream later because these are a couple of trade setups that you could go for. I'd say put the trade setup maybe up here around 28,830. That might be a little too high, but maybe not. We'll see. It's one of those things you're probably going to want to kind of watch and do it manually. I'm just giving you an idea of what to look out for. Enter a trade after you know you're in a major uptrend. That movement, if we do have a bullish breakout, will probably send us to 29.2, maybe to 30. I'd be a little surprised if we went all the way to 30. It's possible, but I like to be a little more conservative with my price targets. Now, if on the other hand, you're trying to trade the short, or if you're doing what I'm recommending, which is being set up for both, then you can go ahead and set up a short position right down here. I'd probably put it right below this flat level of support, which would be right here, at 27,900. Put your entry price a little bit below that. That means you've broken 28,000. You've also gone another $100 to confirm yourself, and you're breaking below this support level that we had set. This is a little bit more risky because the market has already been so bearish that this will probably have a smaller movement. Bitcoin, in that case, would probably move down to about 27,200, which is our floor that we set back here April 21st, 22nd, 23rd, 24th, 25th, and 26th. So that'd be my price target here. As far as your stop losses go, I'd use a very conservative trailing stop loss here. So I'm not too interested in exactly where the stop loss goes. This stop loss here, yeah, if you come back down below 28,545, then you're definitely out of the trade. But I would use a very, very, very conservative stop loss. And like I said, the entries would probably look like around for the long 28,850, and for the short probably around 27,900, maybe 27,850, somewhere in that range. So again, the entry prices for a long would probably be around 28,900, somewhere in that range, based on the local resistance that was set on May the 2nd. That was yesterday. Look down on the hourly chart for that resistance. And then for a short trade entry, then you would be looking for around 27,850. And the reason that those entries sit there is because that allows the market to break above or below their trend lines for a little while, and that gives them that sense of confirmation, so you're not jumping into a moving train, but you're waiting for the stop, and then you can actually ride the train for longer. And it does mean that you'll be making a more safe trade. Now, you guys know I am not all about trying to get a speculative trade where you make 100x because you're using 100x leverage. I'm about trying to make more conservative trades, increase the amount of capital that you have, 5, 10, 15%. If you're using leverage, that's fine. Just make sure you're being safe, 2 to 5, maybe 10%. Be careful with using 35x leverage or something like that. If you are, then make sure you're using a very small amount of capital. Regardless, I think no matter which way the market moves, there is a prime opportunity to make a trade today and make a lot of money. That being said, because everybody's watching this like a hawk and because everybody is in position to make this trade, the majority of that movement is actually as a result of the people that are moving into the trade. So if it's moving to the downside, part of the reason it's moving to the downside is because of all the short trades. So be on the lookout for the fact that this is kind of a manipulated movement because everybody's trading because of the movement. And so the movement is basically only happening because people are trading because they think everybody else is going to trade. So if it doesn't kick off instantly, then you probably missed the boat, or excuse me, you probably haven't missed the boat. It's that it probably isn't just going to happen. So there's a possibility that we trade sideways. I just don't think it's the most likely outcome. Jack Mihoffer said, wow, we don't need to know anything. You do want to know what's going on. It's very important to have the surrounding details. That being said, you can be prepared for both outcomes. And that's what you should do. Absolutely. When is the government going to start printing money again? As soon as they think it is necessary. Which is probably sooner than you might think. All right. Guys, we've got almost 800 people in chat here today. If you're new here, make sure to hit that like button, subscribe to the channel, and hit that post notification bell so you will not miss a single upload. Thank you guys so very much for tuning in. And also, make sure if you haven't already to sign up for Club DeFi's Principles of Technical Analysis. Guys, this is the one-stop shop where I'm going to teach you everything that you need to know, and you're going to be able to learn everything that you need to know about technical analysis like I just showed you so that you can find these trade opportunities on your own. Guys, I believe in something called financial sovereignty. And the Bible tells us that you cannot serve both God and mammon. That means you cannot serve the Lord and you cannot serve riches at the same time. For you will either love the one and hate the other, or else you will despise the one and love the other. That's what you cannot do. You cannot serve both God and money. You cannot serve whatever it is that you're trying to serve in your life. Maybe it's not God, but whatever it is that you're trying to serve in your life, maybe it's your wife, maybe it's your ministry, maybe it's your field, maybe it's your career, whatever it is, you cannot serve both money and that because you will hate the one and love the other. You'll hate the one master and love the other. If you're trying to serve both God and money, or you're trying to serve both something else and money, you'll fail because you're going to pick one. It's the way humans work. That's the lesson there in Matthew 6:24. I want to help you guys to put your finances in the place where you are not serving them, but they are serving you. That's what I want you to do. I want you guys to have that financial sovereignty, that security to know that your finances are exactly where they need to be so that you can be prepared for whatever it is you're doing in your life. And one of the ways I want to help you with that right now is by teaching you technical analysis so you can spot these trades. But in the future, I also want to teach you guys about how to plan your finances, how to figure out what your books look like personally and your accounting looks like personally so that you can go ahead and manage your finances in a way that you're able to successfully trade and invest in cryptocurrencies without putting too much money in. I want to talk about portfolio balancing. There's a lot of different concepts on this concept of financial sovereignty that I want to teach about. Right now, we're teaching about technical analysis. I've been doing technical analysis for almost 6 years here in the cryptocurrency market, and I've helped teach thousands of people how to learn technical analysis. So if you're interested in learning technical analysis so that you can spot these trades and make the most out of them, I highly encourage you to sign up for Club DeFi's Principles of Technical Analysis. You can find the link for that in the description box down below. I would highly encourage you to sign up today so that you can get started learning TA sooner than later, especially so that you can be prepared for the coming bull market. Let's read some chat, and then we're going to wrap it out. Let's see. I think somebody said something that I'm a little confused. Secretary of Tips said that shows his mind isn't corrupted. I feel like somebody pulled a gotcha on me, like one of those "is your refrigerator running?" And I feel like I just got by some dirty joke and I didn't catch it because you said that that shows his mind isn't corrupted. I don't get it. I'm sure I have egg on my face somewhere, but I don't know where it is. R.A. Daniel said, the like should be at 790. Please support Jebb for bringing us consistent and true content. Something happened. I don't know. I got somewhere, it looks like. Somebody got me. I don't know. Feel free to explain it to me if you want. I don't know. Yeah, he pulled a Bart Simpson joke on me. Oh, no. I got Bart Simpsoned. Oh, man. We got Bart Simpson. I still don't know what happened. Jebb is a blessing subscriber since 2021. I don't get it. All right, guys. ADA info, where to buy. There's a lot of places to buy ADA. We'll probably go on the on that in the future. All right, guys. Really appreciate all of you guys tuning in. Thank you guys so very much for tuning in. If you did enjoy today's stream, hit that like button, subscribe to the channel, hit that post notification bell so you won't miss a single upload. We go live 5 times a week. If you are interested in signing up for Club DeFi's Principles of Technical Analysis, I really believe that you guys will be able to learn a lot there. And I also really believe that you guys will be able to grow a lot there in your journey towards financial sovereignty. I would highly encourage you guys also to join me here in 15 minutes for the premiere of this video. The Federal Reserve is likely to send a massive shockwave through the cryptocurrency space, and I would love to be able to watch that happen with you guys live. So I will probably be live later at 2 p.m. No promises there, but I think that we may end up being able to do that. Make sure to tune in for this video. There's a lot of information over here that you're not going to want to miss so that you can make the most of today's movement. But that's going to do it for today. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good